Okay, I'm going to share a screen with you. Okay. Everybody see the first screen? I think you can see the first screen. We're going to be talking about farm finances and succession planning this evening. Our first speaker I want to introduce is Matthew Eldridge. Matt is the CNI Relationship Manager in Agricultural Finance for First Financial Bank. We're very proud to have First Financial Bank as a sponsor and one of our partners for this evening. And Matt, we certainly appreciate your time. And if you want to go ahead, Matt, I'll go ahead and start your slides for you. If you want to go and introduce yourself and your presentation, Matt.
Yeah, thank you. Can everybody hear me okay? Can you hear me, Kyle?
Yep, I can hear you just fine.
Okay, good. Well, I thank you for inviting us to your program and letting us be a part of it. I do work for First Financial Bank. I'm based in Greensburg, Indiana. And I came on with First Financial Bank a few years ago when we were part of an acquisition, a buyout, as we hear about oftentimes today with businesses in our communities. I was part of Main Source Bank prior to that, if anyone was familiar with the Main Source name. So I do commercial ag finance. So just to give you a quick rundown, not a lot of detail, but typically in your banks, you'll see three levels of financing. You have consumer, which is your house, boats, cars types things. And then you'll see business banking. That might be your gas stations, restaurants, maybe a single hotel, large rental property. And that'll usually go from a finance standpoint, say $250,000 up to $1 million. And then you go to commercial finance, which is where I'm based in. So I do commercial ag finance, which would start at $1 million and go up. And as we were talking earlier, I know $1 million sounds like a lot, but for anyone in the audience here today that's been in farming and you've seen the trends and things over time, or maybe you manage a business, it doesn't take long anymore to get to $1 million. So I cover the southern half of Indiana and northern Kentucky and southwest Ohio. So I'm a Purdue grad. I went through Purdue 90 to 94 in Ag Econ and enjoyed my time there. And actually, I'm not a native banker. I worked for John Deere, for Deere & Company for about 13 years on the marketing side of their ag division, and really enjoyed that. It gave me a chance to live out east, work with some of the dairies, spent some time in Kansas City around some of the wheat, and then was actually in Reno, Nevada with them when I decided to move family back home around Greensburg. So I had an opportunity to get involved with the bank and do ag finance, and I enjoy it. I enjoy those opportunities to sit across the table and work with families on another solution besides equipment. So I enjoy these conversations for the questions that it might generate. So please, once I finish talking, I would welcome and enjoy any chance to answer some questions. So I've kind of broken things out into a few different categories and try and keep it at a high level, because you can go into the weeds pretty deep on any one of these individual topics. But if you talk about ag today, you can't help but first spend some time on the current ag environment that we're in, because certainly it's seeing some challenges. And by all means, it's been a question of how do we work through that? What's the next step? Where do we see our lows and things start to bounce up? So, if we start back to 2013, 14, 12, of course, was a drought. We've seen some historical highs in commodity prices in that 13, 14 time frame. And I'll be honest with you, hindsight's always 20/20, but those times have not helped us a great deal as we go forward. So as I've heard a few people say along the way, that it was a good party, and now we're still suffering a little bit of the after effects, maybe a hangover, if you will. So during that time, as you guys know, inputs really went up. They shot up seed, chemical, fertilizer, equipment, cash, rent, especially, and they're pretty elastic on the way back down, right? So as commodities adjusted shortly thereafter, those things continued to stay up, and it's created a lot of challenges, not considering the current tariffs and other situations that are affecting commodity prices. So, from a banking standpoint, underwriting and getting things approved, it's been a challenge. It really has, because you take 2008, the mortgage crisis that we all remembered, that really changed the way financing was being done, not just for home mortgages, but across the board. It affects ag finance as well. So it was during that time that there was a lot more scrutiny being placed on financing banks, large lending institutions, how things were being done consistently, and there's more regulation involved in it today. It's not all bad. In a lot of cases, it helps protect us too, and that's not a bad thing. But it does add red tape, and it adds some additional layers that maybe weren't there before. So that's all wrapped up into what we work with today. If you look at some of the weather we've had some pretty good crops for the last 3 years. Now, we've had some dry spells. Last year we did, and there's always some of those popping up somewhere. But I think for the sake of this call, for most of you, we've been in a footprint here in the Corn Belt that we've had some pretty good crops. So despite some of those droughts and dry spells that we had, say, last year, I think the biggest advantage has been the advances we've made in biotech. If any of you were farming or been around in the 80s and remember some of those drought years, or take 2012 even, that's not very far back, some of the hybrids and seeds that we're using, if you could take them back, what kind of difference would it make? I mean, it's still amazing to see the yields we were getting with some of the extreme weather conditions that we've seen, and we're still putting out a pretty decent crop that's not far off our averages. So, the downside of that is we're continuing to produce near bumper crops, and we've done that pretty consistently. And if Mother Nature blesses us and we get a few more rains here through August, we're going to have a pretty nice crop in front of us here, which certainly is needed to help offset the lack of pricing opportunities out there for our commodities. So we'll try to make it up on volume, right, with more bushels. So big thing though is our global supply of corn and beans that we're going to see a carry out. I don't know if you watch the USDA reports, but I try and catch those whenever I can. Whether they're right or wrong, I think there's more accuracy in them than we believe. But they're talking about additional carryout this year, and that's not going to support higher commodity prices by any means. So we overproduce. Our production outpaces demand, and until we see a shift or something there, that's probably a reality that we're going to be continuing to work through. So. Again, that creates some challenges for farmers. Efficiencies and everything have got to be looked at time and time again. If you can't change the top end of your formula, you have to change the bottom end and try and lower expenses wherever you can. But of course, there comes a time where you just can't cut anymore. So there's challenges in front of us. If you look at a lot of the political unrest, I'll say we have out there right now, the tariffs with China. There's a lot of other outside factors working against some of our commodity prices right now, other than just weather. So the current ag environment, I'll wrap that piece up, but there's plenty of challenges out there. Are banks still interested in doing financing with farmers? Absolutely. But I think it does weed out or start to sort out those banks that really aren't committed to agriculture. Everybody wants to play to the game and be at the table when times are good, but when things get tight, banks are regulated businesses and they're regulated and audited on a regular basis. So when their loans get looked at by the feds, a lot of times ag loans are the first ones that get pulled. and are they collateralized correctly? Is the financing in a structure such a way that's going to allow the farmer to succeed? And has the bank mitigated the risks any place that they can? Crop insurance, of course, being one of them. Not very long ago, crop insurance was still optional for a lot of farms, but today it's become a tool, a risk mitigating tool that a lot of banks would not finance unless they knew that the farmer had a crop insurance policy out there to at least cover the indebtedness of what they've got on their operating loan. So those kind of tools like crop insurance are becoming a mainstay in our business, and I certainly don't see those going away anytime soon. So let's talk about keys to egg financing as we go forward, and what does a bank want? What do they need? If you're a young couple or a young farmer trying to get started, or if you're someone that's mid-career looking to expand, or you have kids coming back to the farm and you got to make room for them, is there opportunities out there to finance with the bank? And there certainly is. But I want to talk through just a couple, 3 or 4 items here that are going to be pretty important as you look at approaching a bank and things that you need to think about. So, the first thing I'll tell you, if we get a client calling today that says, hey, I want to buy a piece of real estate, there's a farm coming up for sale, or I got to buy out a partner, or we have a neighbor that's retiring and we need to buy them out. The first thing that a bank is going to want to see is a minimum of 3 years of your financials. That's going to be your tax returns. If it's a corporate entity that you have set up, corporation, LLC, or partnership, they're going to want to see those tax returns as well as a personal financial statement for the individuals that stand behind them. So 3 years of a year-end financial statement too. I think that's important to note. If you're on a calendar year that ends on 12/31, that's the best snapshot you can see for a farm financial statement, because it shows those year-ending inventories of grain that you have on hand. And you need to provide those consistent balance sheets, for at least a 3-year period, in addition to tax returns. Any bank's going to want that to get started. If they don't, then I would encourage you to step back and maybe look for another bank, only from the standpoint that you need to be looking to bring on a partner that's going to work with you on creating and maintaining good numbers. If someone's a little easier and a little quicker to do the underwriting, that's not necessarily a good thing for the farm, because they really don't have a handle on what's going on in your operation. And when things get tight and they get tough, like it is right now, the last thing you can afford is to have a bank or someone that's nervous that doesn't really understand your numbers and what's been going on. So don't hesitate or shy away from a bank that's asking a lot of questions. You want them to ask questions and work with them as best you can. I know it's cumbersome, it's inconvenient, and if you have to pay a CPA to help produce some good, accurate, and timely numbers, from my perspective, it's well worth that, because you're starting to create some habits and some processes within your farm business that's going to let you get good numbers, and that's what's going to help you make decisions going forward. So, you've heard the old saying, I wish we could go back to when a handshake was all we needed to do, and that stood for it. We didn't have to sign a lot of papers, and unfortunately those times are behind us. With the dollars involved today, it's just it's a whole nother level of business that you got to be willing to look forward to. And once you get those numbers started, a lot of the farms I work with use QuickBooks. That's the software they use, and a lot of CPAs prefer QuickBooks, I guess, because it's simple and it's easy to use. But whatever you use, you need to have something out there to start collecting that information and doing good financials. So that's the first thing. Second thing is you have to follow a plan. I like to use acronyms. Have you ever heard the acronym MOPWOP? Make a plan, work a plan. Make a plan, work a plan. So when you sit down and agree on a loan structure with any type of financial institution, they're taking a bet that you're going to follow that plan as the loan was set out, and try and roll it forward. Now, they understand that Mother Nature doesn't always play fair, and commodity prices can do a 180 really quick, but they're going to expect you to follow the plan. So, what I mean by that, let's give an example of what doesn't work. So let's say you're taking out an operating loan in a bank, and that's to be used to buy inputs, seed, fertilizer, chemicals, fuel, labor, repairs for that year's crop. And you have a farmer that might decide to go out and buy a new $180,000 tractor, or maybe $300,000 tractor, and they're going to purchase that on their operating line. That would not be the right way to do that. So that bank's expecting that to be used for inputs. If you want to finance a tractor, then that would be a 5 to 6 year term loan. So that's the kind of plan where a bank's looking for a farmer to set up an operating strategy. If they think they're going to buy a tractor, that's something you'd want to talk about up front for the coming year. What are your CapEx needs, capital expenditure needs? And let them know that up front so they can build some of that repayment, that debt, that term debt into your numbers and see how it cash flows. So banks shouldn't be there to tell you what to do. They should be there to give you ideas and numbers and some guidance on what your operation is going to look like if you choose to make those decisions. So use them as that. Use them as a sounding board to sit down at the end of the year and go through those numbers and make plans for next year. Our bank requires a projection. So when we gather tax returns and year-end financials, we also ask for a projection for next year. Now, we don't hold a farmer to that because it's just a projection. It's just that. Things can change. But we look at how many acres they're planning to put into corn, beans, wheat, livestock, if it's included. You look at that projection. If the farmer's projecting he's going to get $5 corn, I would probably have a conversation and say, let's maybe, there's nothing wrong with being optimistic, but you want to underpromise and overdeliver. So let's get that down maybe to $3.85 or $4 if you think you're going to have that pricing opportunity. And, banks look at that to see what is their strategy, how do they plan on working through this, and how optimistic are they. So, and then at the end of the year, we look and see how the actual results compare to your projections. And it helps you as a tool to say, am I going at this the right way? So following that plan is a pretty big deal. I talked about accurate and timely financial information. That is a big deal. There's a lot of financial ratios that you can use in farming, but I'm only going to talk about two because this is one that, irregardless of the institution, these are two ratios or numbers that any bank is going to want to look at. And the first one is working capital. You've probably heard that term. So working capital is very simple. It's your current assets minus your current liabilities. And that number that's left is a good indicator of what you have left if things did turn rough, that you could liquidate in a short period of time to generate cash to keep things afloat. And when we look at working capital year over year, we look at the burn rate. How fast is that operation burning through their excess capital? And I don't know if anyone's ever heard of Dr. Kohl, K-O-H-L, but he's a good farm ag economist that's with Virginia Tech. And you can search him up, and anytime you can listen in on one of his talks and ag strategy reviews. They're usually 45 minutes. I would really encourage you to do that. Dr. Kohl has been at it for a long time. Actually, his family runs a dairy farm out east, and he's been at it for a long time, and he's got a good way of sharing information. And, he talks about working capital a lot. And one of the things that he's always encouraged banks to do is divide that farm's working capital number by their total farm expense. And that gives you a good base guideline. If that number is less than 10%, that farm could be a little vulnerable. in terms of having enough capital there to weather a storm. So I can tell you for the last 4 years, every farm's working capital in general has trended down. It's probably half of what it was even 2 years ago, 3 years ago. So the burn rate right now in working capital is a direct reflection of what's going on in the commodity market. The pricing opportunities have just not been there. So when we have a farm that's at a zero or a negative working capital position, our flags are going up a little bit. Does that mean we're going to ask them to leave the bank? No, not necessarily. But what we might be doing is asking for more conversation on, hey, what's your plan? If they have a lot of real estate that's paid for, maybe been in the family for second or third generation, we might need to ask to restructure it. Let's get rid of some of this other term debt. If there's payments out there that are being made each year, let's restructure some real estate and stretch this back out, and put some working capital back into the business so that they can operate. So that's a key number. That working capital is a pretty big deal. The second one is debt service coverage ratio. So debt service coverage ratio is really, it's just a reflection of cash flow to meet debt obligations. What is their ability to cover their term debt? And so a good debt service coverage ratio would be 2 or higher. And the way that's calculated, be that farm's net operating income. This would be your annual. So at the end of the year, what's your net operating income divided by your total debt payments for the year? What is your annual debt load added up? So you divide your net income by that, and that'll give you your debt service coverage ratio. So you'll hear about loan covenants. Loan covenant is a agreement between the borrower and the lender of some of these key numbers like debt service that operator is going to keep that at, say, 2 or higher every year. We're going to look at it. A lot of our farms right now have a 1.25 debt service coverage ratio covenant. And if that farm drops below it, it's not the end of the world. We're not going to end the relationship, but we would start looking at it and say, what do we need to do? What's the plan? What's some thoughts going forward so that we can keep this thing in a good position and start asking for more feedback. If you had a debt service coverage ratio of 1, you're basically, you've got just enough to cover any debt and interest payments that would be coming up at the end of the year. So those are 2 just basic ones. There's a litany of others, but working capital and debt service coverage ratio are 2 key ones that you can calculate pretty easily, and it's ones that have a lot to do with the health of the farm. So we do look at those. The other one here, to ag finance, a key to this, the last one I'll talk about is going to be succession planning. This is a big deal today because we're at a point right now, as you guys have all heard over time, some of the trends of farmers getting older and aging and who's going to take it over. That's a big deal to a bank. Who is going to be in the driver's seat going forward? And not so much is there somebody, but how are you going to transition them into the driver's seat? That can create a whirlwind of debt and financial struggle for a couple, a family that is, say, trying to retire or sees retirement in the horizon. And now they find themselves trying to transition son or daughter and in-laws back into the operation. And they're taking on more debt to make this a smooth transition. And I'll give you an example. Dr. Cole, that I'd mentioned earlier, does some good research, and he looks at what age bracket the majority of debt is setting with today for farmers. And right away, you would expect in that, say, 20 to 35-year-old bracket, a younger couple or a younger farmer, he or she that's wanting to get started taking on debt. And if you compare that to a middle age or, say, 55 or older, what's startling is that most of the debt today is in that 55 and older category, and that's not what you would expect. But 3 years running, that's where the most of the debt load is being held. And it's, 9 times out of 10, as you dig into the numbers, you'll find it's mom or dad trying to grease the skids and pave a way for the next generation to take over. But they wanted to be getting out of debt at that age, not taking on more debt. So what I'm saying is, to a bank, it's a big deal to know how you're going to finance that transition, who's buying whose assets, and what's the interest rate going to be, and how soon does this have to happen. So you should be ready to offer that up to a bank to talk about what that plan's going to be. And if there's no one to pass it on, you're going to rent the ground out, then great. That's part of your succession plan. But that needs to be a part of what you're bringing to the table when you're talking about keys to ag financing. That's something banks going to want to know. The next part of this is who can finance. So, you got first-time farmers that are wanting to get started, and then you've got, I'll say, last-time farmers. They got some real estate opportunities. They've been waiting on that farm to come up. They've watched it sell 3 times over their farming career, and they're not going to let this one slip by. So, the last-time farmers at the second half of their career are looking for finance opportunities, and maybe haven't financed in the past, but now they need to. So, for them, there's always the traditional financing. I still run into some farmers today that have never financed, which is great. They've been able to operate out of cash. But we're in times now where they're figuring out that cash is king. We need to hold on to our cash and look at some financing. Interest rates are at historical lows. But they don't have a lot of financial history to bring to the table. So that's where I go back and say, if you're mid-career, towards the end of the career, and you're finding yourself wanting to finance, you got to start putting some numbers together. A bank's going to want to see, your 2017, 2018 year-end financial statements. And if you need help putting those together, your bank should be able to help you do that, or your accountant. You just got to get good numbers together. If you're a first-time farmer and you're trying to get started, the first thing I always do is say, you need to go talk to your FSA office, your USDA office, and look at the first-time farmer programs. Those are really good programs. We do quite a bit of that, where we partner with the farm service agencies and helping young people get started in farming. And I tell them, you got one opportunity in your farming career to go out there and get a long-term fixed rate loan at these kind of low interest rates. You need to take advantage of it. So, how would you do that? Get a hold of your local USDA or FSA office. Ask them if you can come in and sit down and talk about the programs they can offer there in that particular county. And the programs are the same, but when you cross state lines, a few of the things change. But county to county within a state, the programs are all pretty much the same, and they're very good. They're good programs. Banks like partnering with them because they can put guarantees on the loans that help mitigate risk for the bank. So, financing a young farmer will have more risk, but if the FSA office is willing to guarantee, say, 90% of that loan, that takes the risk off the bank's back, and they're oftentimes willing to extend a little further, maybe work on the rates a little bit and make it easier for that farmer to get started. But you do have to start with the FSA office. And there are some restrictions. You can't be, farming for more than 5 years. And so it's got to be in that first 5 years. And once you get beyond that, they're going to classify them as you're no longer a first-time farmer. You've been at it a while. And you also have to file a full, a Schedule F, a tax return, filing as a farmer. So those are things, if you're thinking about it, for the next tax year, maybe you're not ready to finance yet, but you need to get your tax filing squared away. Talk to your accountant about that so you'll be in a position to take advantage of it when you need to. The next thing I want to talk about is government programs. Are they a necessity? I'll tell you from the banking finance side, they absolutely are a necessity. In our portfolio of ag customers in the last 2 years, call them the Trump programs or the government programs that have been out, they've made up approximately 47.5% of a farm's gross farm income has come in the way of these program payments. So you're approaching 50% of that farm's income. That's no longer a supplement. That is a key part of that business. So, there was a point in time when there was pride in saying, I don't need a government handout and I'm not going to use these programs. My grandpa and father never did, and by God, I'm not going to do it. So I think you got to look at that different today. If you're going to be viable and you're going to go forward, you need to be in a position where you can take advantage of these programs. And what I oftentimes, from my opinion in this is, you got to look at the other factors that are playing into our commodity prices in our markets today. Those aren't all acts of God. There's a lot of political factors that play into that interrupt our cycles. What we would have considered just a free market, let it find its balance. Not like that anymore. There's a lot of government political factors that play into that. And so the system is all but designed for these programs to be a part of it. And I'll give you an example here. As we went into spring, we heard about the Paycheck Protection Program, the PPP. It was a CARES Act, part of this COVID relief, and the government was offering loans to businesses. And I did right around 3.5 million of those in my ag portfolio for ag businesses and farmers that were able to take advantage of it. Some of that was forgivable. A percentage of that loan was forgivable if they could keep those employees on the payroll and keep them involved in the business instead of going to the unemployment line. That was the government's intent, was keep the people working, keep the paychecks going to keep the wheel turning. So my point to talking about that PPP program, the Paycheck Protection Program, is that the farmers that I worked with that reached out and said, am I eligible? I really need this. Can we take advantage of it? The ones that really needed it, it was a matter of making the payments or not. A lot of them couldn't do it. Not because they didn't have payroll expense, but they didn't have a entity business structure in place that would allow them to meet the requirements. So on that particular program, it took your total 2019 employee expenses, obviously wages, and if you had healthcare related expenses, you could include that. And you took that number and you divided it by 12 months, got a monthly expense, and you took it times 2.5. And that's what you got. And it was really pretty much that simple. But because the farmers didn't have any payroll expense they could claim, whether it was an LLC or a corporation or a partnership, they didn't have any tax document that they could file to show what their expenses were. They weren't eligible for the program. And that was sad because they were the ones that really needed it. So my point to that is, I think these types of programs we're going to see again. And the environment that we're in for the next 4 to 5 years, I think this is going to be a mainstay. And as a farming business, you need to be in a position where you can take advantage of these when they come available, or at least have the option to say, I can take that, or you know what, I think we're okay, we don't need it. But you need to meet with your accountant, and if you need to get an attorney involved to help draw up an entity structure so that you're eligible for some of these types of programs, you can take advantage of them. Because there's nothing worse than to have a hand out there that can help, but you can't meet a couple of the criteria. It's too easy and really not that expensive to get something like that put in place, but you got to think ahead and you got to start doing it. So yeah, government programs, I think, are a necessity, and any bank is going to look at that and say, what have you collected in program payments for the last, 3 or 4 years? It makes a big difference. The other thing I'll say here is I'll wrap down here. I'm going over on my time a little bit. So Kyle, I'll speed it up. But, what are you doing? from a standpoint of the farming operation. Farmers work hard. You get up from dusk till dawn. We put in the hours. You do a lot of stuff. The other thing I'll say is you got to be involved somewhere outside of the farm. What is your niche? If I could lay down all the financial statements for our farmers today, within a few minutes, I could pull out the financial statements without looking at the names and could tell you which farmer is either doing some type of contract for seed beans. They're growing something that's maybe a specialty crop. We got a few that do organic corn. It's a lot of extra work. Non-GMO, doing green beans if they have access to, to irrigation to put out a specialty crop. But there's somewhere they're contracting. Somewhere in there, they figured out how to grow what they can sell instead of selling what they grow. And in today's traditional corn bean market, if you're just dependent on that, selling what you grow without a lot of control over that price, it's not an easy game. So when I'm saying get involved, what is your niche? If you're someone young that's looking for financing to get started, you got to come to the table with something different. You got to find that niche. We've had a lot of requests at our bank in the last year and a half for hemp. We hear about that, but we've got some large farms that have made a big investment in processing hemp, and it's working out. But I tell you, they've spent a lot of time with a marketing plan. They know where that product's going to go, and they know what price they're going to get. So they're carving out their niche. They're finding what works for them. And for some of them, it's been hog buildings. They're working with an integrator on a contract hog building to generate some additional income. So not advocating any one of those, but it's something that I think is a reality that you got to be looking at here going forward that gives you some control over that end price of what you're producing. And it's something else I'll tell you. If you look at the size and the number, the dollars that are involved today in an average farm, you're running a small manufacturing plant. You're producing a product just like a factory would. And if you've got employees, you've got an HR department, you've got some significant investment in equipment, assets. And so you need to treat it like that. You need to treat it just like that. And so you need to have some partners involved. The other thing that I'll say here, and I'll finish up, the biggest thing that oftentimes will make or break a farm comes down to, 5 to 7 to 10 cents a bushel when you spread things out and look at where their break-even's at. And so those farms that have figured out their marketing and how they market their crops over a 5-6 year period will make a significant difference in earnings to the bottom line than a farmer that's just calling it by the seat of their pants as they go. And not saying that's not a bad strategy. It's worked in years past for a lot of farmers. But if you look in the last 2 years of farming, how many opportunities did you have last year to sell your crop above a break even? And we would say for 2020 in our footprint, an average break even for corn is going to be somewhere around 380 to 385. Now there's some exceptions to that depending on the farm and what their debt service is and their living expenses. But for 2020, we've not seen many opportunities yet for a farm to get above that. So you got to be willing to find a marketing partner, someone you can partner with, and to take the emotion out of your trades and have a 12-month grain marketing plan of what you intend to do. Now, it's going to change. It certainly is going to change, but you're starting out the year knowing what your break-evens are. And when you get above it, you've got a calculated formula. You've got it laid out in front of you of when you're going to pull the trigger, and you can take the emotion out of that and start to lock in some profits as you go. You may not hit all the home runs, but that's okay. Year over year, you're going to earn some consistent returns. The old plan of filling the bins and waiting is not a marketing plan anymore. It really isn't. So, you know, the farmers that I see be successful, they've got that person off the farm that they talk to, that they bounce ideas off of. They don't pay these people a lot of money to market their crops. The farmer still pulls the trigger and makes the decision, but they got someone out there that you can take the emotion out of these trades and share some ideas with to help you work throughout the year through a 12-month crop cycle. So that's a really big deal. And it's becoming ever more important in times like this. So, you know, I'll wrap up with that. Grain marketing is a big deal. Banks like ours are still interested in ag finance. We have 4 people, including myself, that just does ag finance. We have an ag underwriting department, and that's a big deal with a bank. You ought to ask, who does your underwriting, and what do they know about ag? If they're doing a gas station or a hotel and then moving over to an ag loan and trying to underwrite it, you want to make sure that they know what they're doing. They understand ag. We've got a dedicated department that our underwriters just do ag loans. And you need some people that have some expertise around agriculture to look at your numbers, or it's going to be too easy to overlook some of the things that really mean a lot to the bottom line. So accrual accounting being one. We do accrual accounting when we look at our numbers. You know, for a carryover of grain from one year to the next, and when you sell, that's a pretty big deal. If your bank is only looking at your Schedule F, your tax returns to look at your business, they're selling you short. You're not getting the benefit of the doubt. So you need to work with a lender that's going to look at accrual adjusted statements as you go forward. So those are things that your accountant can help you with as well. And I know there's some softwares like QuickBooks that make that pretty easy too. So with that, I will shut up. And I welcome any questions. If there's anything there you got a question on, we can go back and hit on it again.
Okay, well, thank you, Matt. So Tom, if you see any questions in the chat box, or anybody would like to unmute and ask a question, Matt, we'd certainly appreciate it.
Yeah, there's not been any questions in chat. I know we do have someone on a iPhone, so maybe they need to unmute since they probably can't type in a chat. But yeah, good presentation, Matt.
Well, thank you. We hit a kind of high level, but you know, if someone does have other questions, I'd welcome them anytime. They can email me, call me, whatever they would like to do. But the big thing with banks today is that you got to have good numbers. We don't get financial statements on a napkin or on a half a page of paper ripped out of a notebook. We're working with clients that have got something in QuickBooks that's consistent from year to year, quarter to quarter. And you've got numbers that once you get it set up, it's not too hard to keep them up and keep them current. So just processes and habits, I guess.
Okay. Any final questions for Matt? Okay, Matt, we certainly appreciate your time tonight.
Yeah, thank you. I'll drop off, and if you get any more questions, don't hesitate to forward them my way.
We will certainly do that. Thanks, Matt. So we're going.
Thank you, Matt.
We're going to transition. We're going to talk about some succession planning material. So my name is Kyle Weaver. I'm the Extension Educator here in Switzerland County. I'm also a member of the statewide succession planning team. So there are about 12 of us across the state that work with farmers and agriculture professionals and transferring that management and transferring that ownership to the successor or to someone else that's going to be taking over the business or the farming operation. And we're going to go over some very basic things about succession planning. We all know that many of us are at different places and stages in succession planning tonight. So hopefully we'll cover some of those things. And as we did before, if you have any questions, put those in the chat box, or at the very end, we'll have some Q&A time about succession planning topics. So going to begin with a study that was done in 2012, and they're getting ready to start this study over here pretty soon again, but it was a study on farm and non-farm business entities, and they found some pretty interesting results, in my opinion. They asked what was the most important goal to a family business, and they asked about profit, they asked about a positive reputation with customers, they asked about business survival, they asked about keeping it in the family, also talked about the opportunity to work with family members. And as you can see the percentages there, overwhelmingly it was a positive reputation with the customers. So if you're producing freezer beef, you're producing produce, if you're you don't have a dairy farm, whatever it is, whatever your customer says about you, you want it to be a positive thing. And you want people to know that if I have a product that comes off my farm, when it comes back to you, it's going to be a good quality product. So that's what the goals are for family businesses, and family farms are the same way. So it's important to kind of have that in context as we kind of talk about the rest of the succession planning program here tonight. But it's that positive reputation because we all want to be known for the good products that we produce on our farms. So what Matt was talking about was succession planning, and we'll talk about that in some general terms here in just a few minutes. But the question is, have you identified a successor? And as you can see, over 70% of the people surveyed did not have a successor. And that's a problem, especially if you've been in the operation for 30 or 40 years and you're nearing retirement and you have no idea what to do as far as a successor is concerned. So it's important to think about who those successors are. And we'll talk about some roadmaps to do that here in a little bit. But as you can see, it's a difficult move. And why it's a difficult move is because we have to start thinking about the end of our careers. We have to start thinking about, what do I do next? And those are tough questions for people to answer. You know, if I've been farming for 40, 50, 50 years plus, what's my next move? And I enjoy what I'm doing. And I don't really want to have the take the time to think about who's going to do it after me, because I'm enjoying what I'm doing. So that's kind of where it goes to as to why some of those folks haven't identified a successor. So the next question was, what does the owner expect to happen when you transfer the business to the next generation? Excuse me. And as we can see, the categories were the business will be liquidated, the business will be sold to someone outside of the family, or the business will be sold to family successors. And overwhelmingly, the owner expects that business to be sold to family successors. That's what they're wanting. Now, the big question when it comes to succession planning is, if that's your plan, have you put that plan in place? And do other people know that's what your plan is? So we start thinking about transferring those businesses. This kind of gives you a good breakdown of where we are today and where we need to be in the future. So the survey asked the question about, I worry that my heirs can afford to purchase my family business. And as you can see from the numbers, almost 40% of those surveyed agree strongly that they're worried that the heirs or the successors to my family business cannot afford to purchase my business. Now, if you think about the numbers that Matt talked about, your $1 million plus $3-4 million operation that you have, if I have a son or daughter or someone outside the family coming to my business or my family farm, can they afford to pay me what my $3 or $4 million farm is worth? And that's an important question. And you have to start thinking about your future and whether or not those folks that are coming on as your successor can afford to purchase and be part of that family business. So the next question was, I plan to transfer the family business to a family successor, even if it puts my own personal wealth and livelihood at increased risk. And as you can see, a large portion of the slightly agree and strongly agree participants in a survey would put their own personal livelihoods at an increased risk in order to get the farming operation to a family successor. So if you're thinking about $1 million operation and you were selling it to someone outside the family, would you just give it to the person for the $1 million and give it to them for free? So you have to start thinking about the business plan and thinking about, would I forego the $1 million payment or whatever that number might be in order to give that to a family successor? Because you also have to start thinking about and planning retirement for yourself and how you're going to enjoy the years off of the farm. So those things are very important. We start thinking about your own personal wealth and how you can proceed in the retirement years if that's what you choose to do. So this is important. We start talking about stages of management transfer, ownership transfer, and estate planning. as you look at the categories from not started to finished transferring, overwhelmingly we have the management transfer, the ownership transfer, and the estate plan is not started for 40, 50, 60% of those that are out there in the farming operations. As you can see, we have some that have just begun. We have an oral agreement. We have a written plan. We've started the process, and maybe we've finished the process, but those percentages are very, very low. So as you can see, when you start talking about ownership transfer, management transfer, estate planning, it's important to start those things very, very early and to have a timeline as to when to accomplish those goals. As you can see, it's important we start thinking about the finished product when it comes to succession planning and ownership transfer. So as we're talking about succession planning, we're talking about bringing family members on. We want to talk about a couple things that are very specific to adding a family member. And as we try to grow the family operation, we'll talk about a few things. And the first one being, what's the test? How do I know if I could bring another family member onto the operation, and what's it going to look like? And probably the first question is the management side. So if I've operated the family operation for 30 years, and I bring a son or daughter onto the operation, what's that management style going to look like? Am I going to be the one making the decisions on the corn and beans, or is the person coming on the farm going to be making those decisions? What does the management structure look like when it comes to your family operation, and who's in charge of what portion of the operation? And that management style may change, and it's very important to know that some of your family members that may come onto the farm, they may decide to do things totally different than the way you've done them for 20 years. So it's important to understand and incorporate those different management styles. Policies are important, and we'll talk about human resources in a few minutes, but if you don't have policies on your family farming operation, you should have, because you want to know who's in charge of what category and how we do things on the farm, and have directions and policies that fit your farming operation, and they're in place so people understand what those policies are and how to work those policies and how to ask questions and make things work for you. Also deals with the farm finances, the proficiencies for farm finances. If you need to bring on a family member that understands finances, as Matt just talked about, and how important it is to understand how the finances work on a farming operation, and how those things can work the best for you to keep that farming operation in the family, if that's what you're choosing. So we'll talk about the income portion of the operation. When it comes to adding family members, what's the minimum size of a farming operation? How big does it have to be in order to have someone else come onto the farming operation? So if you think about a minimum size, does it have enough capital, enough assets there to operate and to have 2 families or 3 families or maybe 4 families working there with a family operation? And will that be a quality of life when it comes to the family operation? Will they have quality of life? Will they be able to pay their bills? Will they be able to pay their principal payments? Will they be able to go on vacations? Will they be able to purchase new cars? All those things are things you should be considering when thinking about bringing a family member into the farming operation. And we think about economies of size, and we're talking about those minimums. There are things that you can go to and consider when it comes to adding those members, but you have to start thinking about the variability in farming operations. So if my entire family is going linked to my income on the farm, and I made $100,000 this year, but next year I make $20,000 a year with a bad farming year, that's going to be something that should be considered. So is there a maximum size to a farming operation when it comes to bringing those family members on? So if I have 500 acres and I want to bring my son and daughter onto the property, and I buy 500 more, is that too much acreage? Is if I add 100 new dairy cows, is that a maximum size? Have we reached that point? And you start thinking about the goals. So what is the goal of the farming operation? Is your goal, as far as a long-term goal, to add those 50 or 100 extra more cows? Is it to add those 500 more acres? If that's not part of your goal, then maybe you could get to a point where you could be too large of a farming operation. Risk tolerance: the larger the operation, the more risk you have. That's not just weather related, that's also financial related. There's lots and lots of things that can happen when you have larger operations. Your lifestyle is important, and we'll talk about that in some basic terms here in a few minutes, but Lifestyle is something that you have to think about, and we've had some conversations with some folks during our succession planning meetings across the state. And we have some folks that have come from non-farming backgrounds. Maybe that's a spouse that comes in and marries into a farm family, and they don't understand why their spouse is not back at the dinner table at 5:30 in the afternoon because they don't understand why the cows have to be milked and the planning has to be done. They just don't understand those things. So it's important to be able to have those lifestyle conversations when it comes to the farming operation, bringing some other folks on, because it's not just the son or the daughter or who that might be. It's also the spouses and their families that come with those farming operations. You know, what's the management ability? So if you're bringing another person on the farming operation, you know, how does the management structure work? How do you work along with, how do you work and get along with your son or daughter when it comes to those management decisions? And of course, there's a greater risk, greater stress, greater income variability when it comes to increasing your farming operation and making sure that you have something that could be too big as far as a maximum size. So we'll just kind of talk about the family business and relate this back to the family farm. And there's some elements of a family business that are kind of important. I want to share those with you. One is that more than 80% of all U.S. businesses today are family owned. And that's a pretty, I think, a pretty proud statistic when it comes to what I see. So it's nice to see those family owned businesses that we have in the United States. But we have a couple things. Those firms are controlled by a family or founding family. But we know that those firms that are controlled by a founding family, they have greater value, they operate very efficiently, and we know they carry less debt. That's just kind of one of the founding cornerstones of firms that are a family business, and especially when it comes to family farms. We also know that 2 of the 5 businesses have 2 generations of family members working on them. So when you start thinking about family businesses, you have at least 2 generations working on them, and it's a pretty proud moment as well, that you have those family members coming back and adding to the farming operation. So, but there are some stumbling blocks when it comes back to family businesses and also to the family farming operation. What is a management succession? If you don't have a management succession plan as to who's going to make those decisions, that's something that you should definitely look into learning how to provide one of those for your employees, whether those are family members or non-family members, and thinking about those management decisions. So we think about less than 1/3 of the first generation businesses fail to survive into the second generation. That's a statistic that is kind of alarming, but we know that's the case. And we also know that of those that do, 13%, only 13% make it to the 3rd generation. So those are some things that we're seeing in family farms and also family businesses across the country. So what we see as a result of that is about 20% of the family businesses last beyond 60 years. And if you think about this, and if we were in a face-to-face presentation, I would ask this question and get some answers. But if you think about this, how many farming operations do you know today that have lasted 60 years in the same family? How many agribusiness operations do you know that have lasted 60 years in the same operation? So those operations are out there. They do exist. They are getting less and less because of lots and lots of reasons, but management transition is one of those things. And so that's a stumbling block for those family farming operations. A few more I want to talk about. So why are those succession planning odds, why are they so low? Well, it's really that management succession plan. So we have the operator, the incumbent in the operation who has been there 30, 40 years, and they just haven't decided that it's a good time to start transferring management to the son, the daughter, or the outside family member, whoever's coming onto the farming operation. So that really is one of the key roadblocks to having a good succession plan. So we know that 80% of all businesses, they intend to pass their company, their family business to the children. That's what the plan is of those incumbents, those ones that are operating and managing the family operation. But we know that over half of those do not have a formal management succession plan. It's something completely different to tell your son or daughter, or whoever that person may be, that you will be the person that will take over the family operation when I retire. But it's a totally different thing to have that in writing and have that management succession plan posted and agreed to by all the parties. So it's important to have a formal succession plan that you guys can work with and works for your farming operation. So if we think about how we can be successful, well, one of the things is to keep the business strong enough and healthy enough to last into the next generation. You know, farming is a risky business, and we know that, but what steps can we take to keep that family business strong enough that if there is someone that would like to come back to the farming operation, how can we make sure that that family operation is there for the next generation? So keep that business strong, and lots of ways to do that and to mitigate that risk. But probably the most important one is the next point, and that's having a healthy family into the next generation. And normally we'd ask this question as well, but where are all the most important family decisions made? Well, the answer to that question is usually it's the family dinner table, correct? So a lot of those family decisions are made at the family dinner table. So it's important to think about a simple step, and I'll share the simple step with you in more detail later. But if you're thinking about those difficult decisions that come, at the dinner table for the farming operation, maybe a better place to have those decisions may be somewhere other than the family dinner table, because the family dinner table is also a great source of pride and a great source of joy, where you have your family dinners, your Thanksgiving dinners, and the laughs and the talks that you do as a family. So make sure you're having time and taking time to have those family members healthy into the next generation. So this is our family business model that we share. And as we look at the three models, we have the ownership model, we have the family model, and we have the business model. And as you can see, those things intersect. Now, as a farming operator, as a family business, can you separate the three of those things? Well, the answer to that most times is you cannot always separate those three items. You have to have ownership of the family operation. You have to have ownership of the family farm. And you are going to have a business. You're going to have an agriculture business. A farm is a business, and those things do carry risk. But you also have the family. Regardless of whether your family member comes back to the farm or not, you have those children that work on the farm. You have your spouses that work on the farm. Maybe they work full-time on the farm. Maybe they work off of the farm. They come back and they work in the evenings and the weekends, but you have family there as well. So it's important to be able to negotiate and to have cooperation between those three things, because they are going to intersect and they are going to be something going forward that you have to find a way to manage. So as we talk about some qualities that are essential to having a really good family business and a farming operation, this works well in the agriculture world and the farming world as well. And we'll talk about a few of those a little more in detail. But the first one is just shared values. You know, it's been the Smith family farm for 50 years, and the Smith family farm is extremely important to you as a family. So that's a value that you have. You want to produce the best milk there is in your county. You want to produce the best sweet corn that you have, the best tomatoes that we sell at the farm stand. That's your shared value. Everyone knows in the family that's what you're going for, and that's kind of the shared value that you have, and it's important to share those as a family. So shared power is something that's is something to strive for as you start making those management decisions. You know, does each person in the family have shared power? And you know, if I make the decision as a manager, what role does maybe another family member have in that shared power? So it's important to think about what role do I have? What role do my children have? What role do the people that come onto the family business or the family farm have? So what's the tradition? So we know that Smith Farms has always been very big in the agriculture industry, and we're proud of what we do. So what is the tradition? And do those family members share your traditions? You know, those farmers markets that we go to and we sell the best produce. You know, we have the best beef cattle, the best freezer beef in town, and everyone knows it. And we want to be able to continue that tradition. So also, what about a willingness to learn and grow? We all know that farming and agriculture is not the same today as it was 20 years ago. Things are a lot more technology based. We have lots and lots of things that happen very, very quickly in agriculture and also in the farming industry. And those family members that are coming onto the farm and those family members in a family business should have those qualities and start thinking about how do I learn and how do I grow and how do I keep up with some of the new trends that are happening in agriculture. So what about strong family ties? And those certainly are qualities that are essential to the successful family business. And, maybe it's been, granddad and uncles and cousins that have been part of the family operation. And we enjoy going out and working together as a family. And those things are very, very important. So just some insights when it comes to thinking about succession planning and thinking about transferring ownership and management on these family operations is respect the challenge. As Matt talked about, we have an enormous amount of debt going to older generations, and we want to avoid those kind of things. And how do we have a way to think about those things early and understand that there's going to be challenges, there's going to be ways that we're going to have to think about things differently, maybe outside the box, and maybe mitigate some of those risks. We all know that issues are predictable. It doesn't matter whether you're working with your best friend or your family member, your father, your brother, your sister, you're going to have issues that are going to be happening on a family farm. It is kind of a stressful time, as you guys know, but perspective on the issues are going to be a little bit different. You may see as the manager, the incumbent on the farm that's been here 40 years, that if you lost 10 bushels to the acre, that's tragic to you. But maybe the successor coming on doesn't see that as an issue as much as you do. So those things are perspectives important, and thinking about all those perspectives and how we can predict some of those things. So communication is key. Excuse me. There are ways to think about communication a little bit differently. One of those is to kind of form an independent board of directors. This could be an independent body that you could have kind of oversee your farming operation, and you can bounce those questions and those issues off of that independent board of directors. If you have different structures, LLCs and partnerships and corporations, some of those do require you to have a board of directors. So there are some things structure-wise that you may use an independent board of directors. But also, if you don't have that structure, you could have, maybe it's the neighbor farmer down the road. Maybe it's someone that you trust that you can use to bounce ideas off. Think about having a regular process of family meetings. Family meetings are something that are extremely important when it comes to a family operation, a farming operation. Are you meeting with those individuals in the family that are part of the operation? Do you do that monthly? Do you do it quarterly? Do you never do it at all? Those things are important that we get progress checks and we think about what's happening on the family farm and how we can make those things work best for all family members. Excuse me. So we think about planning. Planning in general is essential to continuity. So if you stop planning, you stop growing. And that's an important concept when you start thinking about how to be, how to have continuity and think about family operations and farming operations. You have to be able to plan. And you have to have everyone involved in those plans, and it has to be short-term and long-term plans. And how do we find a way to get there? And those family meetings are good ways to sit down and think about. Well, we said, in 5 years we were going to purchase the Johnson farm down the road because it was up for sale, and we're here at the the end of those 5 years, and have you done that? So it's important to review those goals that you had for those plans. And commitment. Are you committed to the farming operation? As a family, and what's our commitment to going forward, and are we committed to the operation for the next 20, 30, 40 years? So we'll kind of talk about the 4 P's of succession planning, and they're pretty interesting as we start thinking about each of these. And we'll talk about the policies before the need, the sense of purpose, the process, and parenting. The first one is policies before the need. Now, as we think about policies in farming operations, most of them don't exist. What we have is rules, informal rules that operate on the farming operation. So we know who's in charge of planting the corn. We know who's in charge of milking the cows. We know how to feed the cows. We know how to feed the beef cows. But are there specific policies that you can look at and document for all personnel on the farm? Now, those things have to be reviewed, and they have to bring attention to issues before they become personal. So a good example would be, if I'm working on the farm as an operator, and I'm one of the sons, and there's an issue with maybe a child of mine that may have become ill, and I have to take some time off. What is the policy for taking a leave on a farming operation? What is the policy if I want to take a day off on the family farm? Are there written policies that can be useful to the family operation? Can we write those things down? Can we have a policy manual? You know, it's pretty safe to say that most family operations do not have those, but that is something that you should probably consider. Excuse me. So you're managing expectations and you're preparing family members for how things will work. And that's important to start thinking about policies. And, you know, the son or daughter wants to come back on the operation and they have expectations and you have expectations, and those expectations should be written down and they should be reviewed. And that should be part of the policy. And it kind of sets the requirement for joining and moving up in the business. So if I'm a part of the cousins that come on the farming operation, I'm the third cousin to come on the family operation. Can I move up into a management level? And what does that process look like? You know, how do I join the operation first? And how do I move up to maybe a management level, making some decisions on some portion of the farming operation? What's the compensation package? What are my performance appraisal issues? You know, I don't know of any farms that have ever had a performance review for their employees. If there are, I would certainly like to see their policy, but it is important to think about, you know, reviewing and thinking about evaluating your employees. That also includes family members, and thinking about you know, documenting those things from year to year. And, you know, as employees, we don't like to be evaluated. We don't like to have documentation of our performance, but it's important. And then what does that policy look like if I'm doing really well on my performance appraisals? What does it affect? How does it affect my compensation? So, you know, do I get a raise every year? Do I get a bonus? What do those things look like for me as an employee, whether I'm a family member or a non-family member? What do they look like? And how do I know that those things are in place? It's one thing to share those things as a manager, but those things should be in place, written down and documented, so everyone has access to those things. So, oh, did I miss one? Yeah, sense of purpose. So you think about generation to generation. What do you see as the family farming operation? What do you see that as how do you see that as a family business? Do you have an overarching purpose that makes continuing the family operation worth all the strife and sometimes the stress? In most cases, the answer to that is yes. You have a sense of purpose because you want the Smith family farm to continue and you want it to be successful. So all those things are important. We start thinking about successors when it comes to bringing those folks onto the family farm. So process and parenting. So you have to be both on a family operation. You have to be the manager, but you also have to be someone's parent. And sometimes those things can go together very well, and sometimes they don't. But you have to start thinking about the meeting and discussing that family members do to resolve issues. You know, is it a father-son dynamic? Is it a manager-employee dynamic? And those things are totally different. You know, as a manager, and I have, you know, an issue with something you did on the farm as far as your performance, I should be able to tell you that as a manager. As a father, do I say the same words to my son? And can we separate those two things? And that's a difficult thing to do. But there are ways to think about those operations and be able to resolve those issues. And sometimes it takes some practice and negotiation to start thinking about how we resolve those issues. Do you have a capacity to deal with an issue you know, effectively when it's a function of your skills as a communicator, a problem solver, maybe to reach consensus and think about win-win solutions that collaborate? You know, it's important to know that, you know, how the structure works on a farming operation. Who makes those decisions? You know, if I'm one of the cousins and I'm, you know, one of the lower people on the family farming management operation structure, who makes the decisions above me? Is it the uncle? Is it your father? Is it the grandparent? Who makes those decisions? And how can we collaborate and make those things win-win for everybody? So those are important that we start thinking about when it comes to the process of being a manager and the process of being an owner, but also being a parent. Those things are important to start thinking about. So we'll talk about stages of development for farming operations. And a lot of the farming operations that I call traditional farming operations have kind of had this map go on. The first one, stage one, is the owner manage. So that was probably the grandparents that started the farm, you know, 50 years ago or 40 years ago, and they started the operation with, you know, a couple hundred acres and some cows, and that's how the operation started. Then they had some children that came along in stage 2, which were the sibling partnerships. So you may have a son or daughter, or 2 sons or 2 daughters, or how the operation would work. They're coming into the farming operation. They're the partners that are coming in under the owner management. But what role do the sibling partners play in the farming operation? Are they considered managers? Are they considered owners? It's important to start thinking about, when you start thinking about developing a succession plan, what role do each of these stages play? And the last one's the Cousin Consortium. You start thinking about, the sibling partners have had children, and those children are coming, on the farming operation, and maybe there's 3 or 4 or 5 or 6 of those cousins that come on the farming operation. And probably the most interesting thing is what happens when you have only a couple of those cousins come back on the farming operations as adults, but the rest of them did not come back to the farm. But what role do those non-farm cousin children play on your farming operation? Do they have a role? Are they important to the farming operation? And those are some management decisions you'll start thinking about when you start thinking about transferring properties, transferring ownership of farming, farming operations to those next generations, maybe it's the 3rd generation. And we'll talk about each of those in more detail. So we think about the owner management is proprietorship. So the business is really there to serve the pleasure of the owner and the family. And what we kind of mean by that is, if the owner of the farming operation, the manager says, I want to, have 200 Hereford cows this year, then that's what their decision will be, and they'll have 200 Hereford cows. And it may be more profitable for a farming operation to have 200 Angus cows, but they want Hereford cows because they really like Hereford cows, or they want to raise, 10 acres of sunflowers. Whatever it is, they do that for the pleasure of their of what they want to do, and that's their pleasure, and that's their certainly right as a proprietorship and as an owner. The second one we kind of talk about is the capitalist. Their goal is to maximize shareholder value, even if that means selling the business. So, they look for opportunities to make money for future generations, and they have, a farming operation that's successful, and maybe that means at the time when the selling's good that you sell the operation. That's kind of what a capitalist will do. They're looking to make, the maximum shareholder value for that operation. Then you have the steward that we call the owner manager, and their goal is to engage and to preserve and enhance the business for future generations. So I know as the grandparents, I want the farm to go back to my children who are the next level managers. And I also want that farming operation to go back to my grandchildren. And how can I ensure those things happen? Well, you have to put yourself into a management and a transfer of ownership plan that works well for you and your operation. But you also have to start thinking about the finances and making sure that the operation, 1, can work very well financially, and also 2, has the size and scope that will work for those future generations. So the sibling partnerships, and you think about those 2 siblings that come on, are they co-managing partners? In a lot of cases they are. They share equal ownership of the farming operation, and they share equal control. So they make management decisions together. And that's certainly kind of the best scenario we can have for those co-managing partners is they share ownership and they make those decisions. Now, maybe you have a situation where, one person runs the dairy part and the other person runs the crop portion of the farm, but they share management styles and they're able to have ownership of the farm together. And they also have a caretaker partnership where you have one sibling has the ownership control, but the other sibling may share in rewards of that ownership. So maybe I have the son who works on the farm and takes care of the farm, but I have another son that works off the farm and comes back and works on the weekends and the evenings. He's not quite there as much as my first son, but he certainly has an ownership in the farm, and we want to make sure that they all share in the rewards if they make equal risks. So those things are important. Then we could have an investment partnership. We have siblings that are non-employed investors in the farming operation. We have, lots of LLCs and corporations that are kind of set up that way. You have non-employed or non-farm siblings that come, those shareholder meetings, and they have a stake in the farm. They're invested in the farm. They share some financial risk, and they share maybe some management risk, but they have a way off the farm, and they're able to come back and to share in that business decision. And this one is the interesting one, what we call the Cousin Consortium. There are lots and lots of interesting things can happen when you have lots of cousins, lots of first cousins on the farm, but there are also issues that are possible. So you think about, if you have 3-level structures, if you have 3 structures of management, you have the grandparents, the partners that are the siblings of the grandparents, and you have the cousins. Where do the management styles come in at? Who's responsible for what? And what do you do with those, the first cousins that do not work on the farm, but do they still have a stake in the farm? So all those things are issues and possibilities that could also come out of the cousins. So we're going to talk about the family and the family perception of the family business. And this is what I think is interesting when you start thinking about family perception of a farming operation. I'll share these with you, and we'll talk about them because they're interesting to think about it and see how we can make these things work for a farming operation. You have folks that believe that the farming operation, the business, is the glue that keeps the family together. We like to go out and work together as a family. We enjoy each other's company. We enjoy working together. We enjoy seeing each other. We like going to lunch together, and that's perfectly fine. But we also have some folks' family perceptions that the business is a threat to the family. What we mean by that is, we have a farming operation that never stops. So that means we can't go on vacation a lot. That means that when harvest time comes around or when planting season comes around, we don't see each other a lot. All we do is work, and it's time to put the hay in, and there's no time to have fun. So you see there are 2 different perspectives there when you start thinking about family perception of a business and how it works for a family and how they see things. And we'll think about it in this perspective, family first versus business first. Does the family come first in the operation? And that's something that you as an operator, manager will have to make that decision on. So when you make business decisions, do you make business decisions that are good for your family, or do you make business decisions that are good for your business? It may be a situation where, I want to bring my other son onto the operation, but it does not make business sense. There's not enough money for that to happen. Are you willing to tell your child that, hey, there's just no room for you right now as the business stands to come on the operation? That would be a business first management style or management decision you'd have to make versus a family first one. So there are 2 different perspectives there when it comes to family perception. And the last one is equal empowerment versus a single leader. On most family farms, there's usually 1 or 2 people that make the management decisions on the farm. They're the single leaders. And they make decisions on the cropping situations, the cattle situations. But there are also some folks that want equal empowerment. I've been on the farming operation for 10 or 15 years. I think I paid my dues, as a son or a daughter. Can I get equal empowerment and get equal say in what happens in those farming operations? And as you start thinking about transferring ownership management and succession planning, do you have that structure in place that those successors coming onto the farm, do they have empowerment? Do they feel empowered and they can make decisions for the farm and do those types of things to keep that farming operation successful? The business strategy is important, and there are lots and lots of ways to set up a business, and we won't get into that this evening, but really as you start thinking about a business structure, you start with family beliefs. What are my beliefs as a family? Those lead into the family vision. Those ultimately form the form of ownership that you have. Is it an LLC? Is it a partnership? Is it a corporation? Whatever works best for your farming operation. That in turn leads us into the business strategy. So we start thinking about what form of corporation do we put together? What's our form of ownership? And how does it relate to our business strategy going forward? So all those things are important, but it starts with the family structure and starts with those family beliefs. And how do we ultimately end up as a business that works well, starting with those family beliefs? So we start talking about family continuity a little bit, and there's 3 things that kind of go what we call the outside circle when it comes to family continuity. That's estate and personal finance, business strategy, and leadership and ownership succession. And all those things relate to the family continuity in the middle, because if you think about estate and personal finance, if I'm working on the farm and it's my sole source of income, and last year I made $40,000, and this year I made $10,000. That's certainly a strain on my personal finances. And if I'm making $10,000 a year and I want to be able to purchase some property, I want to be able to become part of the family operation, can I do that? So personal finances are important. Business strategy wise, is it something that you can use to bring the family together? And leadership and ownership succession, those things are important. We start thinking about management, who the owner successors are, who the leaders are on the family operation. Those things are important when you start thinking about keeping that family business together. So as we're thinking about, so it's time to start thinking about passing on the family operation, passing on the business. What do I do as an owner? What do I do as a manager to be able to do that? And we'll talk about some of those. The first one is pick the right buyer and structure the deal. To find a successor in a family farming operation takes a while. And it's not always clear who that person may be. So it's important to find the person that you believe can work well with your operation and structure a deal that works for both parties, both the incumbent, which is the owner, and the successor. Is there an option to sell to outsiders of the family business? This is important because maybe you have an operation that the family members choose not to come back to the family farm or would not like to come back on a full-time basis. Would it be feasible to sell that to the neighboring farmer to an outside corporation that would work for you? So that's an option. So we'll start thinking about, how do I pass on that operation? How do I pass on that business? Can I sell to non-family insiders? So I've had a hired hand that worked on the farm. He's worked with me for 20 years. Is that an option to sell the family farm? They really enjoy the family operation they have here. They enjoy the farming aspect. Have you had that conversation with that person about selling that family farm to them? Maybe they would love to have that family operation, but you never asked. So it's important to start thinking about all the options when it comes to passing that farming business back to other folks, and also include those, family and non-family insiders that could have a great opportunity for you as a family operation. Or do you want to pass the business to family members? Again, we talked about earlier in the presentation, if I have an operation that, that's worth $1 million, do I give my $1 million operation to my son or my daughter? Or do I sell it to them? That's kind of a difficult question for us as a parent to answer. But you're thinking about, how do I structure that deal? How does it make sense for me as someone who wants to pass the farming operation on? And how does it make sense for someone coming on the farm? So how do we start planning for that? Well, management succession is lots and lots of things, and there are lots and lots of ways to do that. And we'll talk about some roadmaps to do that here in a little bit. But for a smooth generation from one generation to the next, you have to have a succession plan. And it's very important that you have one written down that's documented, that legal experts have helped you put together, because it can't be understated that when you're doing a document, those documents, make sure you have a legal team that can assist you with those, family attorneys, some insurance agents, all those things to make those things kind of how you want those things to be. Do you have a plan that allows one generation to pass leadership to the next, just as you would in a relay race? So, if I'm the father who wants to pass it down to my child, whether it's son or daughter, do I have a way to do that? Do I have a plan that says, in 5 years, I'm going to pass the crop decision-making to my family member? So all those things are part of plans when it starts coming to management succession. And how do we make those things work best for everyone? So if you think about developing a strategy for transferring the trust, respect, and goodwill built by one generation to the next. And this is a complicated issue when it comes to farming operations, because some folks have been farming for lots and lots of years. They have the trust and respect of their neighbors. They have trust and respect of their bankers, their seed dealers, all those kind of things. And does my successor, are they going to have the same trust and respect that I have with the people that helped me become successful? And all those things are important to start thinking about when it comes to transferring management decisions, and do they have that trust and respect, and is it going to go to the next generation? So how do we develop that succession plan? Well, the first one we want to do is we want to select that successor. We want to be able to create a survival kit for that successor. Now, that means lots and lots of things. If I'm, as a farming operator, as a farming owner, does your family member that's worked on your farm, do they know where things are located? What I mean by that is, do they know where the family checkbook is, the farming checkbook is? Do they know who the insurance agent is for your farm? Do they know who your seed dealer is? Do they know what my farm lender's name is? Have you taken that person to the farming or to the bank and introduced them? So those things are things you can do to make sure that those successors survive and they have an atmosphere, they feel like they're going to be part of the management team. You know, we've talked to some folks in our succession planning programs that have no idea, especially the younger ones, where the farm checkbook is. You know, that's an issue. So if I'm an owner and something happens to me driving home, hopefully it doesn't, but if it does, do they know where those things are located? And it seems like a very basic thing, but those things are very important that those successors know how to be successful, and have you created an atmosphere and a survival kit for them to do that. And as we groom that successor, we start thinking about plans. Do they understand how things work on the farm? Sure, they know, they know how the crops, the crop ground works and the cattle work. But are there other things they need to know about the farming operation that you may not have told them? Do they know how much of a debt you have on the farming operation? Do they know how much your insurance payment is? Do they know some of these things that are important that you start teaching them and grooming that successor to be successful? And can you provide an environment of trust and respect for those individuals coming into the farming operation? That they know that, hey, if I'm coming onto the farming operation, I'm going to become a manager, and that's the succession plan. Does the incumbent or the owner operator trust me to make those decisions? And how can they cope with the financial realities of taxes and just the farming in general? Can they cope with a $40,000 loss in a crop year? Can they cope with some of those things? And it's important to be able to think about all those aspects when you start developing a succession plan for a new manager. So what does a successor need? What do they look like when it comes to ownership and management? Well, they have to have some financial abilities. Those things are very, very important that we know. Can I, as a successor, can I have financial ability to make myself successful? So do they have understanding of how QuickBooks work? Do they have understanding of how the debt ratios works, all the working capital? Do they understand those items, and can they be successful with them? Do they have technical knowledge? And what I mean by that is, do they understand not just the basics, the nuts and bolts of how the farm works? Do they understand, how those operations work when it comes to seed dealerships and insurance and all those things that come with the farming operation? Do they understand, and can you incorporate some of those technical knowledge skills into that successor? So can they negotiate? Those things are important. You as a farming as an owner and operator, you've negotiated many things over your career. Maybe it's the price of the seed. Maybe it's the price of the fertilizer. Maybe it's the, you're going to give the guy that's going to come help you, the 16-year-old kid that's going to help you load hay, $8 an hour instead of $10 an hour. So can you negotiate some of those things? And does that successor have those abilities to do that? So leadership qualities, believe it or not, you as a farming operator, as an owner, are HR. So you have to be able to have some human resources qualities to you. And you also have to be able to lead people. So whether you're leading your son, your daughter, or your cousin, or your nephew, whoever it is, you have to be able to lead them. Can you lead the non-family members to do something? The really successful farming operations have those, the successor has those leadership qualities, and you can see it. You can see the person on your farming operation that makes everybody work harder because the rain's coming in. They want to make sure they can get the crop in but before the freeze comes. All those things are important. You have that one person on the farm, or hopefully that you do, that has those leadership qualities, and maybe that person will be the successor for your operation. So do they have communication skills? As a family operator, you're going to talk to lots and lots of people during the day, whether it's the seed guy that shows up, the feed salesman that shows up. You may talk to your employees, but can they be successful in communicating what your needs are as a farming operator, as a farming manager, and do they have those skills to do that? It's important that you understand how to be able to communicate with lots and lots of professionals when it comes to succession planning and leadership planning and transferring of ownership. Can they juggle things? All those things that we juggle as a farming operator, as a family farm, can they do that? So can a successor be able to do the same things that you've done? And if they can, that's great. Or do they handle things differently than you? So, it's always been the thing that I've heard from some older farmers, that the younger generation's always on their phones. Well, what may or may not be happening is the younger generation may be doing some marketing or some things for the family operation that will actually help the family operation. but the perspective of the older farmer is that they're just goofing off. So it's important to be able to have those juggling skills and to be able to understand how each person in the operation works. Do they have that commitment? Do they understand what the tradition is of the farm? And can they be committed to that business? So we'll kind of wrap up as we start thinking about some tips. Start it early. So think about, doing, even if you're 10, 15 years out from retirement, start that process as soon as you can. Involve your family in those business decisions. It's not a good thing when it's time to transfer ownership of the property and the equipment that you're going to give it all to John. And Susie, your daughter, has no idea that you're giving it all to John. And that's a problem, and it does lead to some succession planning issues. So it's important to start early, thinking about those succession planning discussions that you have and those planning meetings that you have. Think about the family realistically and plan accordingly. What does the family look like? What's it going to look like in future generations? What does my area that I'm working in look like? Is there going to be any ground that's going to be available for us to expand if we want to bring family members on? So start thinking about those family members and what skills they have. Number 4, I think, is extremely important, and it leads to a longer discussion than what we have time for tonight. But we have to get over the idea that every person has to have an equal share. If you think about that, that's a very difficult thing for me to say, and it's probably a difficult thing for you to say as a family operator or an owner of an operation. Do I treat all of my children the same when it comes to ownership or transfer of ownership of the family business, the family farm? If I have 1,000 acres and 4 children, do I give each person 250 acres? Or do I give the 1,000 acres to the one son that stayed on the farm, has been working with me for the last 20 years and deserves the farm? Do I give that person the 1,000 acres and find a way to give my other 3 children something maybe that's comparable, or maybe something that they would also want? In some cases, we have the land goes to one child or to 2 children, and the other children would get maybe a life insurance policy, something to offset those things. But you have to start thinking about those discussions early, and they don't have to be equal shares, but it's important to communicate that. If you give those 250 acres to each child and one person wants to sell their share, for a subdivision, then that person that's been running the farm just lost 250 acres. So that's not fair to that person. So you have to start thinking about what's equal and what's not, and why those things are important. So you also have to work with that successor that you have, more than just a year's time. So you have to start thinking about, I know my successor's here, maybe that's a 5-year process. So we start thinking about working with that individual to make them successful. And also get outside help when you start thinking about your business and your transfer of ownership. And that's where that advisory team that comes in at. And we don't have time for the advisory team program this evening, but I do ask that if you're interested in learning more about creating your advisory team for succession planning, or if you're interested in kind of a roadmap activity, how to get started, please put your email or your name and your phone number in the chat box, or share that with us during our question and answer, and we'll be able to share that information with you. And I will certainly be happy to give those programs at a later date about involving those people. And basically what you're doing is you're finding a team of individual professionals that help you do those things, because you cannot do those things, by yourself, more than likely. So you have to have help to do that. And there are ways to create a team that can do that. And there is a pretty good roadmap for success for doing that as far as transferring ownership and management. So those things are kind of important. So timing is key. We want to make sure that we continue. If you are going to continue in the business, would you do that? So, my successor has the farming operation now, but he wants me to stay on the operation in some aspect. Do you do that? Or do you go to, the condo in Florida? What's your decision going to be? And if you do stay on to help in that transition, how involved are you going to be? It's tough when you just gave the 1,000 acres to the successor and they're making a mistake that you see as obvious, but they don't. Do you tell them what the mistake is, or do you just keep that to yourself and allow them to make their own mistakes? So how involved are you going to be? And what are you going to do if you've had Angus cattle for 40 years and all of a sudden they want Charolais cattle? So all those things are important. How are you going to adjust those transitions? Now, how much would the business sell for, and how much does it need to sell for you to get a comparable income? That's where it comes back to, do I give my farming operation to my child? do I sell my farming operation to my child? Those things are two different things. And how much do I sell it, where I'm selling it to a family operation, a family operator, or a non-family member? What do I have to sell it for to make back the income I should be earning if I was farming full time? So those things are important. So if I sell to an outside individual, are there people that that could be on the farm that we talked about earlier that could purchase the business and could really afford to do so? Do I want my children or others to take over the business? What professionals do I need, which is kind of part of that developing your advisory team for that. And what conditions do you prefer? What financial terms? This is something we don't talk about a lot, but it's important. So, you know, if I'm selling off the equipment to my successor, do I want my $100,000 today, or do I want my $100,000 over a 10-year lifespan? And that's important. You think about what financial terms would you really want? What do you prefer? What terms are unacceptable to you? So, you know, I want my money today. I don't want it 10 years from now. I want to go to Florida. It's warmer there. So all those things are important that you start thinking about. What do I prefer? What will I accept? What will I not accept? And we start talking to those successors. How are we going to make those things work? And there are lots and lots of discussions with those professionals about how to make those things happen. So as we start talking about, as we conclude the succession portion, it does take time. It takes patience. It takes preparation to think about a suitable buyer, to kind of strike that deal for that and kind of make that decision. But you got to be able to plan, and you got to be able to start early and make those plans work. And that's just a picture of a typical family farm. And yes, there could be that many people that are part of the family farming operation. So I'm going to stop my share right now. And Tom, if you see any questions in the chat box, you just let me know, or if you want to unmute, we'll ask those questions.
Yes, Kyle, there was two of them there, and it came to me privately, so I just copied them and sent them to you privately.
Okay.
But I'll let you take a little break while I just read it. It says, what are some resources for second generations to work out the succession plan if there wasn't one in place that covered all the complexities of today?
Okay. So there are lots and lots of resources. That's where that advisory team comes in that are extremely important. So if you're looking for resources, I would certainly contact you. Contact myself. You can contact your local extension educator, and they can put you on that path to do that, and identifying those members, those industry professionals that are going to be important to do those kind of things. So we have lots and lots of resources for you, depending on which direction you'd like to go. So you can give me a call or send me an email. I'll be happy to give those to you.
And the second question, are there resources to match retiring farmers or ranchers to younger generations who are not family, but are looking to enter farming or expand their operations?
So that's actually a really good question. There are some operations, some resources out there. And one of the things I can think of the most is beginning farmers. We have some beginning farmers that are looking for operations. A lot of those times those are military veterans. So they're looking for ways to do that. So there are some resources. And again, if you'd like to contact me, I can do those to you privately, because that's probably a longer conversation than we have time for this evening. But that's a good question though.
Yeah. Yeah, any other questions? I didn't see any others in the chat, Kyle, but like you said, if someone wanted to unmute and ask something also. I know it went a little longer tonight than what some folks have been used to, but I mean, this was excellent information, Kyle, and appreciate it. Again, Matt had dropped off, but his was very good information as well. So just a lot to get in here tonight, and just might make mention, I know you were saying how we were recording, but I think at the very end of the session is when all the recordings will be sent to all the people that had registered. And we'll probably have a little link to some evaluation at the end of the program too.
Yes, we will.
And just to let you know, Kyle had mentioned it before, but next week, Wednesday, August 5th, the topic's going to be Fall Lawn Care Tips by Jeff Hermish. And then the last one on the next Wednesday, August the 12th, it's on pond management. And Dave Osborne in Berkeley County and working with Aquatic Control out of Seymour will be presenting the program that night.
Thank you very much. I'll stop the recording now.